can only cut your costs so much. You can only optimize so much. And at what point does that optimization manifest and trend into financials and this ungating that we're waiting for?
Yeah, I mean, when I was appointed CEO, the board was very clear. The task was improve margins, cash flows. That needs to be the focus. We're in a tough industry. We're facing all these headwinds, and we have to get in front of that. And so, luckily, again, very talented team at Ascend, and we executed very swiftly on what I think was an ambitious goal of cutting $30 million from the business in cost savings. And not only did we hit that number, we exceeded it, and we completed it well ahead of the time. So you're starting to see that flow through on the P&L. And we delivered mid 20% adjusted EBITDA margins in Q3, which was up 250 basis points quarter over quarter. And we also improved our adjusted gross margin, which increased by 300 basis points quarter over quarter to 46.5%. And all these improvements were achieved despite negative operating cash flows, negative operating leverage. So because we're facing this challenging market environment, yet in spite of that, we've been able to continue to improve margins and be extremely disciplined about how we execute on our business. And one of those initiatives is just being better about routing our internal biomass away from unbranded products, bulk wholesale, and into more higher margin branded finished goods. And this allows us to execute on opportunities in these white spaces that I mentioned earlier and expand in categories within our brand leadership. And that will ultimately improve margins and improve verticality. And we're deepening our market penetration through this expanded footprint that we talked about with densification. And we're diversifying our product mix. And by introducing these higher demand offerings to meet the customer's needs, we're sharpening our competitive edge. And another successful thing I would like to talk about is our inventory right sizing. Our working capital was way out of whack when I took over. And this is one of the things where I think we really stand out within the industry, because we have one of the strongest inventory positions in terms of days on hand versus our peers. And I'm really proud of the way the team has managed the working capital to date. So we need to continue to do that and stay disciplined. It's very hard in this crazy environment. But I think we have that mental muscle to continue to be successful there. And lastly, our operational excellence and efficiencies through these targeted investments in the production, automation, and our canopy, that fuels our product pipeline and the finished good inventory positions that we have. And we've implemented automation for flower packing, vape filling, edibles, and pre-rolls in most of our states. And those capabilities are going to position us to stay ahead of demand in these exciting categories and significantly increase our production volume. And the upgrades are already demonstrating that impact by reducing labor hours and boosting output.